I went long commodities.
You what?
And in this video, we're going to talk about that. We're going to talk about the indices, we're going to talk about the dollar, and I want to uncover the commitment of traders data and the very interesting data that it actually revealed. All of that in today's video. Make sure to stick around. Let's jump into it. So this week is a busy one. We've got PCE, we've got all sorts of economic data coming out, which we'll maybe talk a little bit more about in just a moment. But let's start out with our overall market kind of pulse check. We got the S&P 500 rounding out here off of its lows, but still off of its highs from last week. Same thing with the NASDAQ and the Dow, actually doing pretty strong here this morning. So we'll continue to watch the Dow. The dollar is coming down and still back to support, trying to hold on to this. We'll see if it can do so. The euro is on the move to the upside. The pound is trying to move higher as well. And gold did come down here in the early session, but I mentioned I went long commodities. And notably, it's going to be these two. So we'll talk about oil, which is seemingly finding a bottom. We'll have to see if that becomes the case, and gold. And again, I took on positions. I'll show those to you here in just a moment. But before we look at the charts for why I'm long those things, I want to show you the commitment of traders data. I want to draw your attention for a second to the commodities listed on this list of the latest weekly filing. Now, what we're looking at, what is the COT data? Why does it even matter? If you're newer to my videos, the commitment of traders data allows us to look at what institutional money is doing on a week-to-week basis, looking at hedge funds, asset managers, basically smart money. What are they doing? What are they buying? What are they selling? Well, if we look at the commodities, you'll notice that all of them are blue. I'm talking about silver, I'm talking about platinum, I'm talking about oil, and I'm talking about gold, right? So all four of the assets that are tracked on the commitment of traders data here in the Edge Finder, you can see are blue. And what that means is that the net change week over week was bullish. And so I thought that was really intriguing here as I sat down to do my analysis this week. And so I wanted to break this down here specifically, like let's look at gold, right? Gold, they decreased the number of long contracts, which you might say, well, that's bearish, but then they very much decreased the number of short contracts. So they really, if we think about this, I did a little bit of an analysis on the live stream here today, and I talked about Mr. Banker. So let's say we're talking about Mr. Banker, right? So this is Mr. Banker, and he's got, let's say, some longs and some shorts on gold at the same time. Let's say he's a hedge fund manager. He has both longs and shorts at the same time. If Mr. Banker went ahead and closed some long contracts, but he closed a lot of short contracts, what does this tell you? This tells you that Mr. Banker as a whole was feeling a little bit more bullish towards gold because, again, he closed more of his shorts than he closed of his longs. So I know this can be confusing, but hopefully that analogy was a little bit helpful to you in understanding the commitment of traders data. It came out to a net 3.3% bullish shift on the week, and I thought that was really intriguing. At the same time, we can look at oil, and you can see they increased long contracts, they decreased short contracts, and overall it was a 1.86% shift. It's pretty bullish for commodities across the board. So now let's have a look at some price action charts. I picked up oil here this morning inside of the VIP room, and it proceeded to make a nice push higher. It's a little bit early in the trade, but let's see if it can continue to run. At the same time, at the time of recording this, oil hasn't made too much of a, gold has not made too much of a move, but I did also get long at this retest of past resistance. So I've got a stop loss below the lows. If this market does roll over either one, and I am wrong about these trades, then I'm out. I cut my loss and I call it a day. But if we can have a little bit of a move to the upside on commodities here, especially following the commitment of traders data, should be really interesting to see how that plays out. So I'm long at support on both of these markets, and a stop loss is below market structure. This signal, again, was shared inside of our Discord channel, and I should just also clarify, you can join our Discord channel for free. There will be a link down below in the description. I also wanted to add in my analysis, when I was looking at gold, I noticed something on the seasonality chart that I thought was interesting. The blue line represents the 10-year historical average data points of gold. How has it performed throughout the year? And what we can see is the red line is this year. We've been all sorts of back and forth with the price of gold, but look at the historical trajectory going from here. We do typically see in the last 10 years an increase in the price of gold in the coming weeks ahead. So I like this as an extra confirmation to my trade setup. I like the technicals, but don't get me wrong, they are what everybody can do. The thing is, I point this out often, and it's just the transparent truth. Anybody and their brother can pull up a technical chart and draw support and resistance levels. That's not that hard. But using data to actually isolate real, tangible evidence for or against why something could be bullish or bearish is what sets professional traders apart. I mention this often in my videos. When you listen to interviews of professional hedge fund managers and huge successful people of Wall Street, they never mention support and resistance. They mention macro, fundamentals, things like seasonality, and all sorts of other variables that we look at on this channel. Our goal with sharing this sort of stuff with you guys in the videos is to enlighten you on what really moves the markets. It's not just technical analysis, which is valuable for entries, exits, and risk management, but direction comes from data. And that's the whole point, and I hope that I can get that across to you in my videos. So seasonality played a part in why I am bullish on gold going into this week. Back to the commitment of traders data for a second, we need to talk about the indices. Some red flags have been popping up, and they are quite literally red right here. Look at the NASDAQ, look at the S&P 500, and look at the Dow. All three of these things on a week-over-week basis saw sell pressure from institutional money. And again, going back to what we said about commodities being generally bullish, if a basket of indices, the SPX, the NAS, and the Dow are all bearish for the week, that has me a little bit concerned, especially when these things have just been rocketing to the moon recently. Perhaps a pullback is in order, and so I'm avoiding getting too heavily long in the indices this week. They've also popped off the Edgefinder's top setups algorithm page, which again, something to think about as well. So all that to say, I do think that indices could see a bit of a pullback. Let's take a look at the technical charts real quick. So first of all, we'll take a look at the S&P 500, which is trading just over 5,000, which is crazy, but also, rational in the sense that the markets are really bullish for a good reason. I don't want to come across as a bear per se, but I do think that in the short term, there's probably a good chance that we could see a pullback. Now, I could be early in thinking that we could rally first before we see a pullback, but I'm not overly bullish at these levels. I'd like to see if I can get a pullback and perhaps even see a little bit of a healthy retracement of maybe like 5% overall. By the way, a 5% pullback historically does happen several times per year on average, and a 5% pullback would put us all the way down right around here at 4,850. So maybe that's our level, and perhaps, we'll come back to this video in a couple months' time and say, yeah, there was a pullback coming. I do think that right now what we're seeing is leadership in a very narrow section of the market, that being semiconductors, right? They're really charging forward, and that's dragging the NASDAQ higher. You can see it again outperforming today, up almost 0.5%. But I do think that this also looks a bit tired. Now, when I say semiconductors, one way to track semis is to look at SMH. It is a semiconductor ETF, so it tracks companies like NVIDIA, Qualcomm, etc. that make chips. And so what we see is massive outperformance in this area of the market. But I do think that anything, although there is a really bullish case for this, and I am a bull myself on semiconductors, I think it's also appropriate to say things can get a little bit overextended, a little bit overhyped. So I'm waiting for pullbacks on the indices before I get long again myself. Finally, we'll take a quick look at the US dollar, which had a pretty mixed sentiment here, a little bit of selling, but nothing really substantial either direction. They closed some longs, they closed some shorts. Overall net just barely negative. And one of the key signals for me this week when looking at the dollar index will be whether or not we're able to break and close underneath this previous swing low. This area was a real strong bounce for the dollar index. So as we zoom in here, I'd like to see if we can actually hold this area. If we can find support, then great. Perhaps the dollar index has a little bit more room to squeeze higher. But again, I'm not going to hold on by a thread. I'd like to see this thing start moving higher. Otherwise, I'll be short-term kind of out of my bullish ideas on the dollar index. Here's my trade on the euro dollar. It's not going too hot. We're in the negative here slightly. And if this does break through the highs, then I'll be out of my euro dollar position. The pound dollar continues to be an incredibly choppy pair. Nothing really to see here. This one has not really been decisive in either direction. So I'm going to be on the sidelines with pound dollar. I should also mention, if you enjoyed using the COT data here through this video, and you'd like to look at this anytime on your own for any currency pair, commodity asset that you'd like to look at, please request a trial using the link in the description down below. You can sign up there and get 30 days access to the software to see if this would be a tool that would be useful to you in your own trading. It includes all sorts of good stuff like our seasonality studies, economic data, labor statistics, inflation, interest rates, all sorts of key data points and indicators that could be useful in your own trading. Again, the link will be left down below in the description for your convenience. Here's dollar yen, which continues to trend higher here on the daily chart. One thing I'd like to mention about dollar yen, we discussed this on the live stream here. If you can get a breakout through the highs today. This could be very interesting to see if we do see some short-term continuation. Could also be some signs of life for the dollar index if this does start to break out. But yen has been an interesting pair. I mentioned on today's live stream that overall, I do think that the yen will have some strengthening come to it at some point, especially once interest rates become a little bit more of a reality in the US in the short term. But for now, the dollar yen continues to trend higher, and this is probably one of the most of the FX world currency pairs, one that are trending the nicest right now in terms of the majors. And by the way, here's a look at all of my current positions, everything from my gold to oil to options trades. And if you'd like to use WeBull, it is a wonderful broker. I've absolutely loved being able to use it. It has tons of analytics, allows me to trade all sorts of different markets. I can trade ETFs like GLD. If you're someone in the US especially, check out the link down below in the description for WeBull. And also, I should mention this, if you're not in the US, it may not accept you, but there are some great other brokers recommended down below in the description. If you do choose to use those links, you'll be helping out my channel tremendously. Those are referral links, full transparency, but they come with some great sign up perks that we've worked out on your behalf with the brokers that support my channel. These are regulated brokerages that we highly recommend ourselves. So check them out down below in the description. The last thing I want to address about gold here in this video is that if you've been listening to me recently, you might have noticed me say, you know, gold is super boring, there's nothing to do here. And then suddenly you wake up on a Monday morning and boom, Nick is long gold. So I don't want to sound too much like a hypocrite. Let me just kind of outline my thought process here. First of all, my position on gold is smaller than my position on oil. So this is a relatively small position because I acknowledge that on the daily chart, we lack some sort of massive clear directional trend. But what I like about gold is that if you do go to the 4-hour time frame, I think there's a good chance that we do retest this daily chart level. I'll show you that real quick here. So here's the 4-hour chart. We've been trending nice. We put in these higher lows. And so I took a smaller sized position than usual on a retest of this broken level and retested level. So my thought process is I think we could make a move up to this level. If that starts to happen, I'll trail my stops, see if we go from there. And at the same time about gold, if you do start to see interest rate cut expectations start to come sooner, I've mentioned this from the beginning of 2024 that I think that the latter half of this year could be very bullish for gold. Am I a bit early? Maybe, but maybe not. As the commitment of traders data showed me, big money is really moving into gold. So I think the risk to reward between seasonality, commitment of traders data, etc., and the nice technical setup, which is, of course, let me just mention, the least compelling component of the three. Charts can look pretty, but they can be incredibly deceiving. Data is what I trust more. Between all that analysis, that's what's got me long gold here today with a relatively small position, albeit. So that's where I'm at. Those are my current positions. We'll see how they play out. I try and keep transparency an integral part of my channel here. So if I'm wrong, I will be the first one to admit it. I'm not here showing Lambos, houses, you know, $1 million lifestyle, anything like that. I'm sharing what I believe to be transparent, real trading on a day-to-day basis. And if you enjoy my content and you made it to the very end of this video, can you do me a quick favor? Leave the comment gold down below. I will try to heart your comment. I just want to say transparently, I really appreciate you guys who watch my videos fully and take in what I have to say and leave good comments. Feel free, leave the comment gold down below in the chat or in the comment section. And if you ask me a question, I'll try and also answer that as well. Thank you guys very much for watching my channel today and have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.